Hi everyone, welcome to Getting to Know BMO, our weekly event, of course, on our YouTube channel. And our man is the mortgage specialist who's with us every week. That's Assad Naeem from the Bank of Montreal, of course. And we decided, didn't we, this week, Assad, because we've done a lot of topics, a lot of programs from BMO, but we thought that today we'd do self-employed mortgages, because a lot of people are self-employed, and what do you need to put in the process? That's your subject for today, buddy.
Yeah, well, thank you very much, Stu. Let's talk about this. First of all, I want to break it down. Who is self-employed? This is anybody who's working for themselves, anybody who has a contract position as well, anybody who's a sole proprietor or has a corporation of their own. This can include, realtors, mortgage specialists. This can include Uber drivers, truck drivers, delivery people, anybody who falls along those lines, who earn their own money, file their own taxes, and they don't receive any T4 or T4A slips or anything like that. Those would be qualified as self-employed people. Now, there are a lot of us out there, and sooner or later, we all need a mortgage. And we start wondering, hey, what do we need to do for self-employed people? Aside from the down payment that you need to have collected, the qualification terms are a little different than those people who are full-time employed as salaried or hourly. What you need to do is you need to plan ahead if you need to buy a home or if you want to get a mortgage. And when I mean plan ahead, to qualify for a mortgage application, you need to have 2 years of tax history. That means your taxes have to be filed for the past 2 years. If you're an individual, that means your T1. And if you're a corporation, that means your T1 and your T2 corporation taxes. Both of them have to be filed for 2 years. What mortgage lenders want to see is 2 years of continued income, and preferably year-over-year growth, if not at least same stable amount of income earned year over year. And that just basically shows, as a self-employed person, you know what you're doing, you know where your income is coming from, and your income is not going to drop anytime in the foreseeable future. And that's why we use that 2 years of history to show that income. And based off of that 2 years history, we take the average of your personal income, and the average of that past 2 years is used in the mortgage application as your income. Reason why we take an average is because we don't know what your income is going to be this month, today, tomorrow, but we can see for the past 2 years it has been steady or growing. That's why the average is used for that. And with that, you need to provide your tax returns along with your notice of assessment for the past 2 years. At times, if you have a corporation, your financial statements for the past 2 years would need to be provided as well to show that you have been in business for at least past 2 years. Or if your business was registered, such as either as a sole proprietor or as a corporation, then you can also provide your articles of incorporation or your date of registration or registration documents to show that you have been in business for more than those 2 years as well. At the end of the day, we just want to give the lenders this peace of mind that this person has been in business, is earning income, and the income is not going to drop. And that right there is the major difference between an employed person going in for a mortgage and a self-employed person going in for the mortgage. So that's why I said it's always good, especially if you're a self-employed person, to plan ahead if you want to get that mortgage. Because Stu, a lot of people want to save their taxes, especially if they're self-employed, and they like to write off just about everything that they can, especially their lifestyles in a legal way. But it's a double-edged sword if you're looking at it. It's either you're going to save on your taxes or you're going to show that income for your mortgage. So it's kind of a situation that you have to discuss with your accountant and your mortgage advisor specialist when you're planning to get a mortgage in the future.
No, it's a good point, isn't it? Because like you just said, you want to save money on your taxes, but you've got to show something in your income, your personal income, to be able to qualify for a mortgage. It's a double-edged sword, as they say, Okay, well, that'll do us. We'll round it up there, Assad. We'll pick another topic for next week, and I'll wish you a good week, a good weekend. I'll talk to you next week, buddy.
Look forward to it.
See you then. Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.